We've all heard the saying, it takes money to make money, but no one ever tells you how to actually make that money work for you, right? Here's the harsh reality. Most people have no idea how to make their money grow. You work hard, save up, and finally hit that $100,000 mark, and then what? Leave it sitting in a savings account earning next to nothing, or risk it all in some trendy stock that could tank overnight? It's frustrating, right? Well, there's a smarter way to put that $100,000 to work. And it's not nearly as complicated as you might think. The answer is Schwab index funds. Reliable, diversified, and with the potential to turn that hard-earned cash into something much bigger over time. In today's video, I'll walk you through 5 of the best Schwab index funds and break down exactly how they can help you tackle the age-old problem of making your money work for you. I'll show you how to turn $100,000 into over $500,000. $2 million, and in the end, I will show you a Schwab index fund that has the potential to turn that investment into nearly a $4 million valuation, paying over $30,000 in monthly dividends. But first, why Schwab? I mean, there are countless investment options out there, right? Here's the thing. Schwab isn't just another name in the finance world. It's a powerhouse that's been around for decades. Their index funds offer a simple, low-cost way to access the market's potential. No Wall Street experience required. As for the selection criteria, I didn't just pick any random Schwab funds for this video. I chose these 5 based on a few key factors: diversification, historical performance, expense ratios, a fancy way of saying how much they charge for managing your money, and their potential for long-term growth. The goal? Finding funds that not only have a solid track record, but also balance risk and reward, so you're not lying awake at night worrying about your investment. Up next are the top 5 Schwab index funds, ranked from solid choices to the absolute best for their potential to significantly add value to my portfolio. Alright, let's kick things off with the Schwab Fundamental International Equity Index Fund, or SFNNX for short. Now, I know what you're thinking. International? Isn't that risky? But hear me out. The fund is designed to give you exposure to international markets, but it does so with a focus on quality and fundamentals, making it a bit different from your typical index fund. Unlike funds that simply track the biggest companies, SFNNX takes a smarter approach. It selects companies based on fundamentals like sales, cash flow, dividends, and book value, meaning you're investing in businesses with solid financial health, even if they aren't the biggest names out there. In other words, this fund strategy isn't about size, it's about strength, which is why it uses something called fundamental weighting. It's just a fancy way of saying it picks companies based on their financial strength rather than their market size, giving you access to solid, well-established companies that have proven that they can weather market ups and downs. This index fund is pretty diverse, holding around 974 stocks across a variety of sectors, with the biggest portions in financials, industrials, and consumer cyclical. So you're getting a little bit of everything. And speaking of holdings, some of its top investments include big names like Shell plc, Samsung Electronics, and Toyota Motor Corp. These are global giants that have been around for decades, so you're getting exposure to companies that know how to survive and thrive in various market conditions. Now, let's get to the part you're really interested in: how this fund has performed. Over the past 10 years, it has seen an average share price appreciation of around 2.77% per year. Now, I know that might not sound like a massive return, but remember, this isn't just about share price. The fund also has a current dividend yield of 2.89%, and when you combine that with an average dividend growth of 4.28%, you start to see the power of compounding in action. So what's the potential future for your $100,000 if you invest today? According to projections, you'd be looking at around $105,660 after 1 year. Fast forward to 10 years, and that number could jump to $176,870. After 20 years, you might be sitting on $327,699, and after 30 years, that investment could grow to a solid $641,383. Plus, you would be collecting an annual dividend of $26,696 or a monthly dividend of $2,225. Next up, I've got Schwab 1000 Index Fund, or SNXFX. This index fund is designed to track the performance of the 1,000 largest U.S. companies, giving you a broad exposure to some of the biggest and most established names out there. This means you're not just getting a handful of the top players, you're investing in a whole spectrum of companies that collectively make up about 90% of the entire U.S. stock market's value. So how does this fund work? Well, it's a market cap weighted fund, which means that the bigger the company, the more of it you own. In other words, your investment in SNXFX will lean heavily towards giants like Apple, Microsoft, and Nvidia, but you're also going to have slices of hundreds of other companies across different industries. This approach means that as these top companies perform well, so does your investment. Let's dig into the holdings a bit. The Schwab 1000 index fund is made up of about 994 stocks, so it's incredibly diversified. That said, technology makes up the largest chunk at around 31.62%, which means you're getting significant exposure to the tech giants driving the modern economy. Other big sectors in this fund include financials, healthcare, and consumer cyclical, all essential industries that tend to do well over time. Now, if we zoom in on the top holdings, you're looking at some familiar names. Apple, Microsoft, Nvidia, Amazon, and Meta Platforms are all in the mix. Together, the top 10 holdings make up about 31.22% of the fund, which means while it's diversified, you're still getting a solid stake in some of the most influential companies on the planet. Historically, it's been a pretty impressive performer. Over the past 10 years, the fund has seen an average share price appreciation of 8.94% per year. Let's break it down into projections. If you took your $100,000 and put it into SNXFX today, here's what you might expect based on current trends. After just 1 year, your investment could grow to around $110,110. Fast forward to 10 years, and you might be sitting on $256,317. By the 20-year mark, that $100,000 could balloon you to $634,244. And if you're in it for the long haul, after 30 years, you could be looking at a staggering $1,537,339. Moving on to the next big player, I have Schwab Large Cap Growth Fund, known as SWLSX. This index fund is designed to target large cap companies with significant growth potential. Think of the heavy hitters in tech, healthcare, and consumer sectors. So it also focuses on large cap companies, which means you're investing in some of the biggest and most established companies in the market. But it's not just about the size. These are companies with a history of robust earnings growth, which makes them well positioned to capitalize on future opportunities. It holds around 63 stocks, so it's not as diversified as some other funds, but that's because it's laser focused on the cream of the crop. Nearly half of the fund, around 48.64%, is invested in the technology sector. But it doesn't overlook consumer cyclical, communication, and healthcare. This means you're not just getting tech exposure, but also investing in companies that benefit from consumer trends, lifestyle changes, and advancements in healthcare. The top holdings? They're some of the most well-known and high-performing names out there. Microsoft, Nvidia, Apple, Alphabet, and Amazon. In fact, Microsoft alone accounts for about 10.14% of the fund, followed closely by Nvidia and Apple, each holding significant weight. These top 10 holdings make up a whopping 52.34% of the fund's total assets. So while you're getting exposure to a handful of other companies, a substantial portion of your investment is riding on these industry giants. The big pro here is obvious. You're investing in some of the fastest growing, most innovative companies in the market. That means you're tapping into their potential for substantial growth over time. However, the flip side is that because it's concentrated in fewer companies, particularly in the tech sector, it's more sensitive to market swings. Alright, let's talk about performance, because that's what really matters, right? Over the past 10 years, this index fund has delivered an average share price appreciation of around 6.74% per year. Combine that with a current dividend yield of 1.21% and an impressive average dividend growth of 13.53%, and you've got a fund that not only grows through price appreciation, but also gives you a nice dividend bonus on the side. So where could your $100,000 take you with this fund? If you invested today, after 1 year, you'd be looking at around $107,950. Not too shabby, right? After 10 years, your investment could potentially grow to $223,917, and by the 20-year mark, you might be sitting on about $577,162. Now, if you're in it for the long run after 30 years, that $100,000 could skyrocket to an incredible $1,940,702. And here's the kicker. If you're reinvesting those dividends, you'd be earning around $137,379 in annual dividends, or about $11,448 per month in dividend income. If you think these returns are good, wait till the end when I'll show you a Schwab index fund capable of turning a $100,000 stake into a $4 million fortune that pays over $30,000 in monthly dividend income. Next up, I have a true classic, the Schwab S&P 500 Index Fund, SWPPX. This is one of those funds that you hear about all the time, and for good reason. It's basically the gold standard bar to beat when it comes to long-term investing. If you want to invest in the big leagues without getting your hands dirty, you cannot go wrong here. This fund is all about giving you exposure to the 500 largest companies in the US, which means you're getting a slice of the American economy's biggest movers and shakers. From tech to healthcare, financials to consumer goods, this fund has it all. The fund tracks the S&P 500 index. It's a market cap weighted index, so the bigger a company is, the more of it you own. And no surprise, the fund is heavily tilted toward the technology sector, which makes up about 32.33% of the fund. But also, there's a good mix of financials, healthcare, consumer cyclical, and communication stocks in there as well. Over the last 10 years, SWPPX has been nothing short of impressive, with an average share price appreciation of around 11% per year. On top of that, you've got a current dividend yield of 1.18%, backed by an average dividend growth rate of 5.67%. Alright, so what's the potential if you invest your $100,000 into this fund today? Here's the breakdown. After 1 year, your investment could grow to around $112,180. Fast forward to 10 years, and you might be looking at $308,748. If you've got the patience to stick it out for 20 years, that $100,000 could turn into about $920,250. And after 30 years, you could be looking at a mind-blowing $2,687,407. We made it to the top pick, and of all the Schwab index funds, my favorite is Schwab MarketTrack All Equity Fund, SWEGX, a fund that's all about diversification and spreading your investment across a wide range of equity markets. It's a one-stop shop that gives you broad exposure to both domestic and international equities. So how does this fund work? This index fund is designed to be a multi-asset, equity-focused fund, which means your money gets invested in a mix of different equity index funds. What's inside its holdings? This fund is a bit of a powerhouse when it comes to its holdings. The largest portion is invested in the Schwab S&P 500 Index Fund, our number 2, which accounts for a massive 27.45% of the total fund. But that's not all. You've also got exposure to the Schwab International Index, Schwab Fundamental U.S. Large Company Index, and the Schwab U.S. Large Cap Growth Index, among others. In total, SWEGX holds investments in around 11 different funds, giving you a truly diversified portfolio with exposure to various market segments, from large-cap U.S. companies to international and emerging market equities. Over the past 10 years, the average share price appreciation for SWEGX has been around 6.25% per year. The current dividend yield stands at 2.71%, backed by a very strong average dividend growth rate of 11.99%. So where does that leave you if you invest your $100,000 today? After 1 year, your investment could be worth around $108,960. In 10 years, you're looking at approximately $254,169. Fast forward to 20 years, and that number could climb to $818,914. And if you're in it for the long haul, which, let's be honest, you should be after 30 years, you could potentially be looking at a mind-blowing $3,940,374. And here's the cherry on top. By reinvesting dividends along the way, you'd be receiving $449,303 in annual dividends, or about $37,442 per month. Want more? Click the video on the screen to find out how to turn $100,000 into a portfolio valuation of $20 million.